Barring mainland China, negative day over here in Asia. Very interesting to actually see that move in China. There is no major news, no major story, no stimulus package, nothing to really explain the fact that we've seen 2 to 3% on the upside, depending on which index you want to choose, from the Shanghai all the way to the A50 in Singapore. But outside of mainland China was a pretty negative story. Started that way, fairly muddled, and then just as we continued along, watching US futures start to really move away to the downside, it just ramped that whole story up, and most of the Asian markets were down between 0.9 and as much as 1.5%. That is all probably to one side. There isn't a huge amount of news driving that. What was interesting was that today was the first meeting of the RBA for 2016, and those of you out there watching the currency pairs, there's some interesting ones on the more exotic side and that are a little bit unknown outside of the big G10 sort of currency pairs. What did they say? Well, it was a complete change from December to the February meeting. We've obviously had a huge, big difference in the last 8 weeks. December 1st to obviously the 2nd of February today has seen a big change in global markets, and they did allude to that very clearly. There is an easing bias, probably not as strong as some were hoping. They are very clearly aware that domestic economy is doing okay, but they harp very much on the idea that if employment and inflation continue to fall away like they have over the last 4 to 5 weeks, that clearly will mean that an easing bias needs to be not only adopted but actually acted upon. The interesting sort of respect out of that is what that meant for the Aussie dollar. It's certainly something we've been watching quite closely, and it's not the normal pair to look at, Aussie US. It's actually looking at things like Aussie Euro, Aussie Yen. Reason for it is clearly the carry trade. So the initial reaction was slightly to the up. It has fallen away and quite strongly in those two pairs. And the reason I harp onto it is because clearly now the BOJ and the ECB are giving you this chance to basically borrow at 0% in those two respective nations and obviously zones, and come down to Australia to get a sovereign bond on a 10-year at 2.62%, which I'll be honest is actually quite a low yield in that bond area considering inflation and the current underlying economy. But also in the ASX. The ASX now has a net aggregated yield at 5.27%, and that is the highest it's been since 2011. There is clearly a trade there, and clearly something that will be something very interesting for hedge fund managers, for pension funds and for money managers to really look at and go, I've got a arbitrage sort of opportunity and very much a carry trade to play out. It is something to watch. We had seen some really good strength in the Aussie yen. It had been looking like it was going to move towards 90, and I still believe that's the case. It's the same if you look at the euro as well. It's really moving back towards 55, maybe even as much as 56 cents. And that is also something to be well and truly part of your sort of your theory and well and truly part of your trading strategy. So they're the two pairs to watch. Interesting day in Asia from that perspective, because although the Aussie weakened, there is definitely a case to be made that it could go to the upside, and that's due to the fact that we can't see a rate cut coming sometime before May. And not only that, there is growing momentum around here that we may go to an early election, and that would also cloud the RBA's sort of mantra and current performance.